On your screen here is our HIRO indicator, which is one of our most popular algorithms here at SpotGamma. And what you're looking at specifically is in white, we have the price of the S&P 500, and in purple, we have our actual HIRO indicator. Now, what the HIRO indicator is a measure of hedging pressure. So as people in real time are buying calls and selling puts in various stocks and ETFs and indices, we estimate the hedging pressure, and the idea is that as this purple line moves higher, that tells us that dealers and market makers may have to start buying stock, and then if the purple line starts to go lower, that suggests that dealers and market makers may have to sell. And so the interesting thing here is that this allows us to also break down the options flow in a variety of different ways and allows us to construct a narrative to understand what may be driving the market. Now, on the right axis here is actual dollars notional of hedging pressure. And when we're looking at this specific chart, this is our S&P 500 combined signal. So this looks at all of the flow in the SPX index, SPDR ETF, XSP, which is the SPX index minis, and then of course, last but certainly not least, the ESF. Those are the E-mini options. It's a real new addition here, the E-mini options. It's been a tremendous addition to the algo. Now, this is from yesterday, the 20th, and one of the questions we are always getting is, hey, I don't quite understand how to read the HIRO flow. How can it help me in trading? Well, there was a great couple of great examples posted yesterday. So first, what you can see is as the market opens, there's this big pop in the HIRO signal, which tells us that on the open, people bought calls and or they sold puts. And as the market picked up into the 4130 area, that flow kind of shuts off, right? The options market basically just kind of walks back its flow and things get a little more quiet. And as you can see, the S&P basically trends sideways, right? So the options flow gets a little quiet. And I say that because we're pretty much range bound. You have a huge pop here and there's this kind of just gentle selling pressure until about noon. And then what you can see here at noon is that the S&P 500 actually moves quite sharply higher to 4150. Now, 4150 is a big resistance area for us if you read our daily subscriber notes. And what's interesting to me about this is that the options flow is not buying that high. And I say that because the purple line, the HIRO indicator, is very flat in through this entire period. So this tells us that, hey, look, if there was calls being bought here, you would see the HIRO line or HIRO indicator moving up. Now, to this point, not every single market move is driven by options flow. Our goal here at SpotGamma is to highlight or inform you as to when we think options are the driver. And so for that, we want to move to the final kind of action for the day, where you can see the market got very weak. And initially, the options market didn't pick up on that. But right here around 2:30, you see that put flow pick up. And I say it's put flow because the indicator is moving lower, which suggests that there's put buying. And you can see that all of a sudden, very much the HIRO indicator is extremely in sync through this period with the options, with the underlying market, excuse me. And so you could see that this particular downdraft here at 3 o'clock to basically 3:15, it's very sharp. It's about a 20 or 30 handle decline. And there's a lot of put activity in that time frame. And I say that again because you can see how closely the options flow in purple is matching the underlying flow in white. Now, at 41:15, we were having a discussion about this on Discord. 41:15 is interesting because that's basically SPY 4110. 4110 on this day, April 20th, was a major support level. Again, we talked about this in our subscriber notes. And so a lot of people were sitting there wondering, should I buy the dip at this point? Should I maybe sell put spreads because volatility spiked a little bit? How can I play this? Should I play for a bounce? Or do I think the market's going to break this support and drop lower? Well, what happens is the HIRO flow shows us that traders are suddenly selling options or buying calls. And you can tell that because this purple line starts shooting higher right at critical major support in the S&P 500, right? That SPDR 410 level. And so this is informing us that other options traders are closing their short positions, or they're taking long positions. They're betting on a market bounce, right? Or they're monetizing their positions. The implication is that we think options dealers and market makers in turn have to buy stock or buy futures, and that should lift the index up. And so what you can see is that as this flow bounces, this options flow bounces, you see the white line, which is the S&P 500 price, find support, and then eventually into the close, you just see a ripping, right? Just a giant rip higher back to 4130 where the market closed. And so we see these types of divergences all the time, and they're interesting not just from a flow perspective, but also just from a sentiment perspective, right? How are other traders treating this? One of the other things we want to show you here, there's a lot of people who understand the implications of 0 DTE these days. In our indicator, what I just did here is I chose the next expiration. And what this is showing you is just 0 DTE flow in the S&P 500. You can do this for individual stocks as well. But what is fascinating in this case is that when you zoom in a little bit, and I make this flow expand the axis, what you can see on the decline is there's a lot more, the purple line drops a lot more relative to the green line. Now, the green line is obviously the 0 DTE indicator. So there's a fair amount of 0 DT, negative delta, or negative HIRO options flow, which tells us that 0 DT is selling calls and buying puts. But the fact that there's a larger magnitude in the purple line, which looks at all expirations, tells us that people are probably buying longer dated puts in this case, right? Because longer dated puts don't obviously show up as 0 DT. So that's very interesting from a sentiment perspective, because as we sit here, the VIX just hit a 1-year low, right? The VIX is around 16 after having been in the 20s. So it's interesting that people are buying these long-term puts. And then second, what happens is there's a huge response in 0 DTE to buy that dip, right? So the magnitude of the purple line off the bottom to this high is almost the same as the magnitude in this case from the dip up to the close of the day, which tells us that the market really bounced here because of 0 DTE flow. It wasn't necessarily that, longer term investors found value off the 410, but we did bounce because of that 0 DTE. So the fact is that we now have this in the back of our mind that, look, some people took the opportunity off of some of these Fed comments to buy longer dated puts. And the reason that we really rallied so strongly was because of 0 DTE, not because we hit this maybe major low in the markets that people were buying long-term flow for. So that's a lot of great information, I think, and should help you, again, really inform your trades. Now, if you have any questions on the HIRO indicator, you can hit us up at info@spotgamma.com. If you're interested in trying this out, head over to spotgamma.com and subscribe to a free trial of the Alpha subscription. That includes our HIRO product. And then you can also see more of our videos here on YouTube and then also at spotgamma.com. And so we look forward to seeing you in the SpotGamma community in the near future.